Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking another look at gold. Since our last update, which was I believe around this time last week, not much has happened, to be honest. I mean, as you can see, gold has been pretty much going sideways within this range, which goes from, the upper part of this range is just below 1800 and the lower part of this range is, well, it's around the 1750s. And if you look back, technically speaking, the technicals have been holding up well because you've got this prior area of resistance back in April and March, which then became support at the end of April. That has formed the bottom of the recent range. So this is the key area to look out for, technically speaking, to the downside. This area around, it's pretty much the 1750s. And then to the upside, you had this area of resistance throughout much of April and in early May, and that has been acting as the barrier to further gains. Also, that kind of coincides because this area of resistance is in the 1790s. The bulls have also been struggling to get back to the 1800 level as well. Obviously, remember, fundamentally speaking, we had this big drop week before last after the more hawkish than anticipated Fed, which dealt a big blow to gold. Obviously, gold doesn't like it when the central banks become more hawkish because that pushes up interest rates, which makes bonds and other assets more attractive relative to non-yielding gold. Remember, you don't get any return for holding gold, whereas you do when you hold bonds. So obviously when their interest rates go up, that hurts gold. So yeah, pretty much, guys, looking ahead, we're looking to continue, we're looking to see whether gold's going to continue to range within this recent range or break out of it. We do have some key events in the US this week that could stir things up. I think the risk does lay to the downside, but obviously we're going to have to wait and see about that. But the key event this week is non-farm payrolls in the US, the official US jobs report. If that does come in strong, which it could do, we don't know, but say it comes in at 1 million jobs added in the month of June in the US economy, well, that is going to embolden the more hawkish members of the FOMC to bring forward or to maintain their more hawkish path, winding down QE sooner than expected, raising rates sooner than expected, okay? So strong data is likely to not be good for gold. And if we do get a really, really strong report, say over 1 million, well then I think there's a good chance we could see this level go. And then when that level does go, technically speaking, the door really is open to a move to the annual lows, which I've got marked up here. You can see in this just under 1680. That's a double low from, when was that set? Beginning of March and then beginning of April or end of March. So yeah, back to those March lows. And this, I feel as though with the Fed pointing in a more hawkish direction now, and with gold having re-entered this long-term downtrend that I've got marked up here and here, the most likely course of action for gold is probably a continued grind to the downside within the confines of this long-term descending trend channel. But yeah, guys, hope you enjoyed the video and I'll see you all in the next one.